Right. So we had the presentations. And we have a report, right? Based on the presentation, we need the report. So we'll set the report deadline 10th March, right? Next week. Right? Word document, the same thing I comment on your presentation last week, right? So where you have to incorporate most of the presentations that basically you cover the content, right? Same content you can come up with the report, right? So I'll have a link here. We have three modes of CA here, group presentation, group report, and classroom. Right. So let's check. Yeah, right. Group presentation 20 marks, report 10 marks, and classroom test 10 marks, right? The report take a AC කරලා තියෙනවා ආය වෙනම කරන්නද presentation group topic එකෙන් you can come up with the report. There are standards නිසා එක standards වල length එක වෙනස් නිසා මම එහෙම limit කරන්නේ නැහැ සාමාන්‍යයෙන් report size maybe say it can vary from 15 to even 20, even little above 20, okay, right? Pages, right? Based on the examples that you incorporate, right? Normal guidelines, reporting guidelines applicable. Deadline next Sunday, midnight. Right. This is where we have started. Group financial statement, consolidated financial statement. Right. So we had this basic idea when one entity control another entity. In this example, Alpha invest 400 million and acquire 80% ownership shares of Beta. When one company acquire more than 50%, the investor can control the subsidiary. So investor become parent, investee becomes subsidiary. So parent prepare consolidated financial statement by combining the financial statements of parent and subsidiary. So here, in this consolidation, the basic rule is, if we are consolidating statement of financial position, we have to add assets and liabilities of parent and subsidiary line by line. In addition to that, we need to make some adjustment. This adjustment relating to these areas, right? Our basic consolidation we can do just adding line by line, right? Then we had this first exercise of the goodwill NCI and consolidated retained earning. Okay. So shall we attempt the exercise 2? The Sigma acquired 60% of ordinary shares of Gamma for investment of 50 million. When ordinary share capital and retained earnings of Gamma 60 million and 30 million respectively. Fair value of non-controlling interest on this date, this acquisition date, 29 million. Retained earning of Sigma and Gamma, 31st March 2023, after 1 year from the acquisition. Parent 80 million, subsidiary 20 million. And company measure non-controlling interest using fair value method. Now here, when we calculate when we go ahead for the goodwill calculation, if investment is larger than the net assets of subsidiary as a goodwill, same calculation you can end up with the negative goodwill, we call it gain on bargaining purchase. Gain on bargaining purchase. Normally we go ahead with the goodwill calculation. When you calculate the goodwill, it can be a gain. It's like we prepare a statement of profit and loss to calculate the profit. It can be ended up with loss. No? Right? So similar way, you go for the goodwill calculation. Right? Normally we name the working as goodwill calculation. Here this is a right exercise, it is given, it's a gain on bargaining purchase, but when it comes to a complete activity, we don't know whether it's a goodwill or gain. We just go for the goodwill calculation. We ended up with the gain. NCA and consolidated retained earnings. Right? Now, we work this corner. Maybe ada quantum activity එක. අපි සාමාන්‍ය goodwill calculation එක investment and fair value of non-controlling interest compared with the fair value of subsidiary. අපි ගත්තේ 175 නම් non-controlling interest 25යි. ඔක්කොම අපිට 33000 invest කරා නම් අපිට ලැබෙනවා subsidiary එක 100% equity which is 30000. මේ විදිහම working එකට අපි යනවා. For the exercise 2. These values are different now. Sorry? This document area is there. Alternate financial statement. A little bit different one. Okay, right. Right, we can have uploaded earlier 2023 one, right? I made some changes, right? අපි මේකට අනුව යමු, right? ඒ නිසා මට මේකත් අපි කරලා නැහැ නේ. අපි complete ගාන කරලා නැහැ නිකන් balance sheet එක combine කරන්නේ. Line by line, right? Okay, we'll start with that. We can take it from this classroom activity. Right? Classroom activity part 1 එකේ පළවෙනි activity එකෙන් පටන් ගමු simple consolidation. Right? Global acquired 100% shares of local on 1st April 2023 by investing 150 million. When the retained earning of local 20 million. At the rate of acquisition, fair value of identifiable assets and liabilities of local equal to the book value. The statement of financial position of two companies 1st April 2023 immediately after the acquisition. Parent Arandina subsidiary is CR, right? The most simple scenario. It's 100% all subsidiary, so we don't have non-controlling interest. So we have property, plant and equipment, investment, inventory, trade debtors, equity, stated capital, current liability, creditors. They are required to prepare the consolidated statement of financial position. Right? So what we have to do here, now in the consolidation we are adding line by line parent and subsidiary figures. So I will take this consolidated statement of financial position. As at 1st April 2024. So we are adding line by line global, local, adjustments, group. And we prepare everything in rupees 23, rupees 1000. So the first step is we are adding assets and liabilities of parent and subsidiary line by line. So non-current assets, we have property, plant and equipment and investment. So property, plant and equipment, two companies, 210,000 and 120,000. Then investment 150,000 and 5,000. Then there can be a goodwill, we don't know. We need a goodwill calculation and keeping a working one. Then current assets, we have inventories, and trade debtors. $65,000 and $25,000. Trade debtors 25,000 and 15,000. Then we can have stated capital, ordinary shares. Remember, the stated capital ordinary shares of the group become the stated capital ordinary share of the parent. Because the subsidiary state capital acquired by the parent in the investment. Anything not belongs to the parent become non-controlling interest. So the subsidiary share capital eliminate in the consolidation process. So it is only parent share capital 260,000. Then retained earnings. We can have the working for second working for retained earning, consolidated retained earning. Unless it is 100% on subsidiary, there should be a non-controlling interest. But in this case, it's 100% on subsidiary. So we don't have non-controlling interest. So we have current liability. Creditors. $40,000 and $15,000. Right. So we have taken the parent and subsidiary asset and liabilities to our worksheet. Then we can have these workings for goodwill calculation. And we need working for consolidated retained earning. Here we don't have non-controlling interest, so I'm not preparing the non-controlling interest working. We have global and local. Right. Now, when we look at the first paragraph, global acquire 100% of local, 100% for investment of 150 million. 150 million in rupees 1,000, 150,000. So you can take this 150,000 entire investment of global represent investment in subsidiary. You can take it out. $150,000 and take it for the goodwill calculation of investment 100%. Acquired for 150,000. When you acquire 100%, fair value of non-controlling interest is 0. If it is 80%, then balance 20% should be fair value of non-controlling interest. But in this activity, fair value of non-controlling interest 0 because it's 100% on subsidiary. There is no non-controlling interest. Parent sale 80ක් ගත්තා subsidiary is the non-controlling interest. So equity of subsidiary not owned by the parent is the non-controlling interest. Equity of subsidiary not owned by the parent. Here, parent own 100% of the shares. So 100% of the equity of subsidiary owned by the parent. Then what is the share capital and the retained earning you are given? It was acquired when the retained earning was 20 million, and anyway you are given immediately after the acquisition. So share capital 130, reserve on that day 20. So the fair value of net asset at the acquisition date, share capital 130, reserves retained earning 20. Altogether 150. So there is no goodwill, right? The investment is exactly same as the net asset acquired. අපි කලින් කතා කරා මෙතන වෙනසක් තියෙනවා නම් by investing 150 million if you are getting only 140,000 worth net asset, the difference 10,000 represents the goodwill. Then 150,000 දීලා අපිට 150,000 ම හම්බ වෙනවා. ඒතකොට මේකේ goodwill එකක් නැහැ. right මේ පළවෙනි activity එකේ straight forward activity එකක් දීලා තියෙන්නේ. ඒතකොට මේ acquisition date එකට තමයි goodwill එක අවුරුද්දකට පස්සේ මේක අවුරුද්දකට පස්සේ නෙමෙයි මේක කෙලින්ම අද right first April 23 නේ දිනු. ඉතින් මේක same. එදාටම තමයි goodwill එකක් හදන්නේ. Then for the consolidated retained earning you need to take then asset liability එකතු කරානේ parent subsidy. අපිට ඉතිරි වෙලා තියෙන්නේ share capital and the retained earning equity. Parent share capital becomes the group share capital. Subsidiary share capital eliminating the goodwill calculation. What is remaining? Parent company retained earning 150. You can take it here. Then out of the subsidiary post acquisition, after acquisition, any increase of retained earning, you need to add your share. In this case, it's 100%. If it is 80%, 80%. But here there is no post acquisition because you were given immediately after the acquisition. Other acquire කරානම් ඊළඟ දවසේ තමයි balance sheet එක දෙන්නේ. අපිට මේක අවුරුද්දකට පස්සේ දුන්නා නම් මොන post acquisition එකක් ලෝකල් ගේ retained earning. Right? acquisition rate එකේ 20000යි. අපිට balance sheet එක දෙනකොට මෙතන 30000 වගේ වෙලා තියෙනවනේ. That means post acquisition period there is 10,000 increase of retainer. From that you have to take your share deduction. It is here after CI. It is 80%, then the balance 20% recording non-controlling. Right. So here, which is quite straightforward one, 150. So you can take here 150. Now other items you can add line by line. We are adding parent and subsidiary figures. So basically in the simple consolidation we are adding assets, liabilities of parent and subsidiary line by line. We need working for goodwill, consolidated retained earning and non-controlling interest. In this activity we don't have non-controlling interest because it's 100% all subsidiary. Right. So value other way to 75. Right. අතන මේ exercise 1 එක ගෙපල් දාපු කීප right මාද මේක අප්ඩේට් එකක් දැම්ම ඒ නිසා අපි මේ 1 එකක් නැවත හදමු මොකද මේකේ තියෙන figures වෙනස් right එහෙනම් අපි ignore කරලා දාන්න අපි මේකේ exercise 1 එකේ ඉඳලා යමු right now we need the goodwill calculation non controlling interest retained earning Alpha acquires 75% of ordinary share capital of Beta for 35 million on 1st April 2022. When ordinary share capital and retained earning of Beta were 32 million and 8 million respectively. Then the retained earning of Alpha and Beta 31st March 2023 after 1 year, 25 million and 12 million respectively. Make their value of non-controlling interest at 1st April 2022 was 10, right? ඔයාලට සාමාන්‍යයෙන් acquisition rate එකේ fair value එක දෙනවා. Non controlling interest. මේක පොඩි calculation එකක් දීලා තියෙන්නේ. Leave it out and take it as fair value of non controlling interest 10 million කියලා අපි add කරගන්නවා. Right? මම මේක ඕනම් adjust කරලා අපු දාන්න. Right? Okay, now we are going to have the goodwill, NCA and consolidated retained earnings. Exercise 1 එක මම දැන් වෙනස් කරනවා. අලුත් exercise 1 එක 75% for 35 million. Right? So 75% acquired for sorry, this is consolidated financial statement 1. Let's check that. I replaced it, but it has not replaced earlier. Right? Then බලන්න account in honey. Now that is okay. Now there. Right. Our investment 75% acquired for 35 million. Right? 35 million is 35,000. Fair value of non-controlling interest, which is given to us 10,000. 10,000. Then this acquisition was made when the ordinary share capital and retained earning of beta 32 million and 8 million respective. And share capital like a 32 million. Retained earning 8 million. That means when it was 40,000. So we, the parent company, invest 35,000 and acquire 75%. If the parent acquired the remaining 25% on that date, that could have acquired for 10,000. Altogether, 45,000, parent could have acquired 100% of subsidiary. But at the rate of acquisition, equity of subsidiary, net asset means equity, share capital plus reserve, only 40,000. To acquire 40,000 worth net asset, we are spending 45,000 extra amount spent for the goodwill. මේ වැඩිපුර වියදම් කරන්න කැමති වෙලා තියෙන්නේ වැඩිපුර ඉන්වෙස්ට් කරන්න කැමති වෙලා තියෙන්නේ goodwill එක වෙන්නේ. This is a goodwill at the rate of acquisition. Goodwill is an intangible asset with indefinite useful life. There is no limited useful life for the goodwill. So you can't amortize the goodwill. Unless value decrease, unless there is an impairment, the same goodwill balance continues. So here 5,000. So same 5,000 we can find after 1 year. Then the non-controlling interest acquisition date 10,000. Then you can take local post acquisition. So the retained earning of alpha and beta 31st March 2023 were 25 million and 12 million. About alpha and beta, right? Sorry. Alpha के තියෙනවා 25,000. That you can take to consolidated retained earning. Beta, after 1 year, it has increased to 12,000. At the date of acquisition, 8,000. So beta post acquisition, 4,000. From that 75%, 3,000 we can add to the group retained. Group retained earning consists of parent retained earning, subsidiary post acquisition retained earning, group share. Parent acquires 75%. So that post acquisition, 25% belongs to non-controlling, which is 1,000. So we have this one. Right? So we need these three workings basically for the consolidation. There will be goodwill. Unless we acquire 100%, there could be non-controlling interest. And the group retained earning, parent full retained earning plus subsidiary retained earning, you take after acquisition. Any change in the retained earning, now it has increased from 8,000 to 12,000. So we can console කරන දවසට තියෙන 12,000 year end එකේ. Acquisition date 8,000, so the difference 4,000 increase. So you take it as an addition, right? Group එකට එකතු වෙනවා. Group consolidated retained earning වලට එකතු වෙනවා. Subsidiaries post acquisition retained earning group share. Any post acquisition retained earning of subsidiary non controlling interest share we have added to the non controlling. කලින් ගානේ වගේ අපිට asset liability තුන complete ගානක් තිබ්බනම් මේ වගේ එකතු කරලා මේ adjustment එකෙන් අදාළ balance sheet ගත්තාම හිතයි. Then when we go for the goodwill calculation, sometimes, now just take this example here, investment in 75%, 35,000, fair value of non-controlling interest 10,000, altogether 45,000. The parent would have acquired 100% of the subsidiary. If the fair value of net asset of subsidiary is 48,000 instead of 40,000, if that is 48,000, what that means? For 45,000 investment, parent would have acquired equity worth 48,000. So it's a bargaining purchase, parent having a gain. For 45,000 investment, could have acquired 48,000. Whether 40 we know 48 here, right? Then the net asset is greater than the value of investment. So then that 3,000 is named as gain on bargaining purchase. The goodwill calculation එකේදී goodwill එකක් එන්නත් පුළුවන්. opposite gain එකක් එන්නත් පුළුවන්. right? මෙතන 40,000 වෙනවා 48,000 වුණා. 3,000 gain එකක්. That gain is added to the group retained. Gain එකක් ආවොත් ඒක group එකේ retained earning වලට add කරනවා. Right? Any gain on bargaining purchase you can add to the consolidated retained earning. Right. ඒ බිස්නස් එකක් එහෙම ගේන් එන්න ෂෙයා පිපුරයි කියන්නේ ඉන්වෙස්ටර් ගේ පැත්තෙන් ගුඩ්විල් එකක් තියෙන්න පුළුවන්. ගුඩ්විල් එකක් තියෙන නිසා ඉන්වෙස්ටර් වැඩිපුර ගෙවනවා. ඒ නිසා සබ්සිඩරි ෂෙයා හෝල්ඩර්ස්ලා ඒකේ ෆර්ම් එකේ ඉක්විටි වල වටිනාකම වැඩි ගානකට විකුණනවා. පේරන්ට් ගේන් එකක් එන්න කියන අරකල අඩු ගානකට විකුණලා දෙනවා. How practically that is possible? Now, when you are acquiring another entity, you have to pay for the goodwill of that acquiring subsidiary. That is okay. That is understandable. Then we go to beta කියන දැනට කරගෙන යන business එකක් ඒගොල්ලෝ business එකේ develop කරපු goodwill එකක් තියෙනවා. ඒකටත් එක්ක තමයි ඒගොල්ලෝ consideration එක ඉල්ලන්නේ. The investor need to pay more. That is for the goodwill. Now, how entity can investor, parent can acquire 48,000 equity for 45,000. This is possible when you are acquiring a loss-making entity. Entity is loss-making. So even after acquisition, next year it could be a loss. Then the parent should bear share of that loss. Right? That is why at the acquisition you need a gain. අපි loss making entity එකක් acquire කරනකොට කියන net asset ගානට විකුණන්න බෑ. ඒකට අඩුවෙන් තමයි විකුණන්න බෑ. මොකද ගන්න කෙනා දන්නවා. මේක අරගෙන අවුරුද්දක් ඇතුළත මේක profit කරන්න බැරි වුණොත් එයාටත් loss එක ඉන්ක කරන්න බෑ. ඒ නිසා loss making entity එකක් acquire කරන අවස්ථාවක අපිට එන්න පුළුවන් gain on bargaining purchase. So if the subsidiary incurring losses, then the post acquisition retained earning will be negative. 8,000 5,000 අඩු වෙන්න පුළුවන්. 3,000 අඩු වෙලා. මෙතන 5,000න් 8,000 වුණා -3,000. ඒකෙන් 75ක් කියන මෙතන දෙන්නවල 25 NCI ට යනවා. Right. Okay. Can you attempt? Exercise 2. මේකේ gain on bargaining purchase එකක් තියෙනවා. Right? කියලා gain on bargaining purchase. अब आपको goodwill calculation के लिए याद करूँगा. मतलब goodwill वाले यहाँ पर है gain एक अपने लेवल. Okay, can you attempt? Right. So we'll take this. Okay, exercise 2. Sigma acquires 60% of gamma for 50 million. So investment 60%, value 50 million. So the fair value of non-controlling, then the non-controlling interest is 40 million, 40%. Fair value of non-controlling interest 29 million. 29 million. So altogether for 79 million, we could have acquired the subsidiary. The subsidiary ordinary share capital 60 and the retained earning 30. So fair value of net asset of subsidiary, the equity of subsidiary 60 plus 30. 90. So we have gain on bargaining purchase and goodwill එක negative කියන්නේ gain on bargaining purchase. right ඒ වෙලාවට අපිට නෙගටිව් කියලා පෙන්නන්න ඕනේ නැහැ වැඩි එකකින් අඩු කරලා මේක ගේන් එක අපිට හඳුනා ගන්න පුළුවන්. So this gain 11,000. Then retained earning of sigma and gamma 80 and 20 respectively. Retained earning of sigma parent company 80,000. Gamma post acquisition 40% ගන්න ඕනේ. 60% ගන්න ඕනේ group එකට. So at the rate of acquisition 30, now it's become 20. So that at the reporting date 20,000, date of acquisition 30,000. So post acquisition we have a loss minus 10,000. From that 60% belongs to group. And 40% belongs to non-controlling interest. 40. Which is minus 4,000. Then this gain on bargaining purchase we need to add to group retained earning. Gain on bargaining purchase 11,000. This is the answer. Any question about this? Dolly had one of me. So basically the goodwill calculation we take investment අපි 160ක් අරගෙන තියෙනවා 50000ක් දීලා ඉතුරු 140 එදා ගන්න තිබු ඉස්සරහට අපි හිතනවා right 100ම ගන්නවා නම් 79000ක් ගන්න. ඒ 79000ක් ඉන්වෙස්ට් කරාම අපේ සබ්සිඩි 100% ඉතිහා වෙනවා. සබ්සිඩි ඉක්විටි වල තියෙනවා ෂෙයා කැපිටල් 60000 ඉන්දෙන 30000 90000ක් ඉක්විටි ගන්න පුළුවන් කියන්නේ 79000කට ගේන් එකක් තියෙනවා. ये गेन है तो ग्रुप रिटेन after activity and retained earning multiplied by the percentage, group percentage. Here 60%. So non-controlling interest balance 40%. Now we are moving to the second activity, complete activity. This is classroom activity number 2. Right? The global acquired 80% of ordinary shares of local on 1st April 2022 by investing 135 million. When retained earning of local were 20 million. Was 20 million. එතකොට මේ දවසට මේ share capital එක 1/3 මේ කලින් එක වගේම activity එකක් තියෙන්නේ. At the rate of acquisition, identifiable fair value of asset and liability equal to the book value. මේ calculation එකේදී අපි fair value of net asset of subsidiary කියලා අපි ඇත්තටම ගන්න මේ book value එකේ share capital plus retained. Right, equity book value. So here we assume that book value equal to the fair value. Later we will discuss when the book value different to the fair value, we need to make some fair value adjustment also. Right? At the moment we are taking the book value of subsidiaries equity equal to the fair value. Right? Fair value of non-controlling interest 30 million. Then you have this the statement of financial position. So can you have the structure similar to the previous one what we had here? මේ වගේ ඔයාලට හදා ගන්න පුළුවන් consolidated statement of financial position. Global, local, adjustment and group. And මේ figures ටික දාලා columns හතරට අපි පළවෙනි හදපු එක වගේ හදා ගන්න පුළුවන්. Okay, so we can first let's take this. Consolidated statement of financial position. Now we have PBE 225 and 140. Then investment 145 and 5. $65 and 40. $25 and 50. Stated capital, parent stated capital 260. Creditors 40 and 20. Right. Then we go for the goodwill calculation. Now investment 80% acquired for 135,000 and fair value of NCI 30,000. 80% 435,000. So you can remove that 135 from the investment and take it here. Fair value of NCI 30. Then the acquired subsidiary retain earning 20 million. We can assume the share capital of subsidiary 150, which was remain unchanged. අපිට ගත්ත දවස් share capital වෙනම දීලා නැහැ. අපිට year end එකේ share capital එක subsidiary එකේ තියෙනවා. So we can assume this is unchanged. It's 130 plus 20. 150. So there's a goodwill of 15,000. The non-controlling interest is 20%. It's given in the question 30,000. Then local post acquisition. From that, you need to take only 80% to the group, and local post acquisition we need to take 20% to NCI. Right. So that retained earning of subsidiary now 45,000. At the date of acquisition 20,000. So 20,000 increased to 45,000. 45,000 present liquid retained earning minus 20,000 at the date of acquisition. From this 80%. % to NCI. Acquisition date retained earning of subsidiary 20,000. Now the statement of financial position retained earning of subsidiary 45,000 local. So 45 from 20 to 45, 25,000 increase. From that 20% to the NCI, 80% to the group. Parent ki retained earning is 160, sorry, 160. Right. Parent 160, subsidiary 45 minus 20, 25,000. From that 80% to group, 20% to NCI. Then after the goodwill letter 15,000. Make NCI, right? Format the NCI. Non-controlling interest. The calling activity in NCI is because it was 100% on subsidy. This is 80% on subsidiary. Now other item you can just add line by line. So the statement of financial position tally for 540,000. Okay, any question? No, should be clear about this. The basic consolidation, the adding asset liability parent subsidiary and having the working for goodwill, NCI and non-controlling. We compare this 80 plus the post acquisition retained and post negative. No, it's a credit balance now. You invest and you are getting equity more. So equity more. So we adding that to our retained credit. Minus from the asset point of view, negative goodwill. ඉස්සර ඔක නෙගටිව් ගුඩ්විල් කියලා තමයි කිව්වේ ගේනවා බාගෙනින් පර්චේස් එකට. ඒ කියන්නේ ගුඩ්විල් කියන්නේ ඇසෙට් එකක ඩෙබිට් බැලන්ස් එක. අපි අතන කම්පෙයාර් කරනකොට අපිට ක්‍රෙඩිට් බැලන්ස් එක. නෙට් ඇසෙට් ඉක්විටි එක වැඩි ඉන්වෙස්ට්මන්ට් එක වඩා. ඒක ක්‍රෙඩිට්. ඒ ක්‍රෙඩිට් එක යනවා රිටේන් එකට ක්‍රෙඩිට්. Right. So then we have the adjustment for unrealized profit. There can be transaction between parent and subsidiary. Parent sell goods to subsidiary, subsidiary sell goods to parent. Right? Here for an example, parent on subsidiary, parent sell goods, selling price 1000, cost 800, gain a profit of 200. Now balance sheet point of view, this 200 profit included in the retained earnings. Parent ke retained earnings to make it. From the group perspective, this become real sale if the subsidiary sell these goods to outside the group. What happened? These goods are included in inventory. Inventory of the subsidiary include this entire house. So then the group perspective, when you take parent subsidiary as a one entity, there is no real sale. Parent sold goods to subsidiary, goods are still with the subsidiary. So when that is the case, right, in that scenario, you see that from the consolidated point of view, this 200 profit is unrealized. Parent company point of view, that's a realized profit, individual financial statement. But group perspective, there is no real sale outside the group. So from the group perspective, subsidy inventory on the 10,000 include the 1,000 goods purchase. But real cost of these goods to the group is 800. Instead of subsidy recording at 1,000, because that is their purchase price. And parent recorded profit of 200. So consolidated point of view, you have to remove the unrealized profit from both inventory of subsidiary and retained earning of the parent. We need to make this. Right. Then what happened? This happened the other way. Subsidiary sold to parent. Same scenario. Now we have 200 unrealized profit. Now unrealized profit recorded by subsidiary. Subsidiary profit we transfer to consolidated retained earning and NCI proportionately based on our percentage of holding. Otherwise, we have to subsidiary එකක් කියලා. ඒක අසුරු subsidiary එක. එහෙනම් මේ 200 160ක් ගිහිල්ලා තියෙන්නේ retained earning වලට. 40ක් ගිහිල්ලා තියෙන්නේ non controlling. So when you are removing, you have to remove the unrealized profit of subsidiary proportionately to retained earning and consolidated retained earning and NCI. Inventory ප්‍රශ්නයක් නැහැ මොකද අපි parent ගේ subsidiary දෙකොල්ලන්ගේ inventory එකතු කරනවා. Parent inventory over value වුණා subsidiary inventory over value වුණා they will reduce the entire realized profit from inventory. Right? So remove the unrealized profit of sale of goods. Right? Accordingly, consolidated retained earning, non-controlling interest, and inventory will be affected. ඊළඟ එක තමයි දැන් unrealized profit ගන්නකොට right. මේ 1000 තිබුණාම 1000 මන් sold නම් 1000 මේ 200 මන් realized. වෙන සමානකට මේකේ භාගය ඉන්නේ නැහැ. Then unrealized would be half of this. The balance out outside. What is unrealized? Related to the unsold amount by the purchasing company. When there are intercompany transactions with the profit, anything remain unsold by buying company, profit related to that part become unrealized. තාම බාන්න විකුණපුවාම මේකේ 500ක් එළියට විකුණලා ඉතුරු වෙලා තියෙන 500ට දාන profit එක තමයි unrealized. That we need to calculate. Then we have intergroup receivable and payable. Again, මේ transaction එක parent එකේ තියෙනවා receivable වල subsidiary ලැබෙන්න ඕන කියලා 5 million. Subsidiary එකේ payable 5 million payable to parent. So when you prepare the consolidated statement of financial position, now say this 25,000 include 5,000 receivable from subsidiary. And this 25,000 of subsidiary payable include 5,000 payable to parent. Group perspective, both receivable and payable overstated. We have to remove it from 5,000 from both receivable and payable. දෙපැත්තෙම අයින් කරන්න. දෙපැත්තෙම එකම ගාන අයින් කරාම consolidated balance sheet එක නැයි. One company say receivable. Individual company point of view that is receivable. But group perspective, nothing receivable outside the group, nothing payable outside the group. So you have to eliminate. ඊළඟ කතාව තමයි මේ දෙකට සමහරක් හැලෙන්නේ නැහැ. ඒ කියන්නේ receivable වල 5000 තියෙනවා. payable වල තියෙන්නේ 3000. අපිට අයින් කරන්න පුළුවන් receivable වලින් 5000 payable වලින් 3000. ඒක count එකක්. That is because of two reasons. Goods in transit, parent විකුණලා receivable කියලා record කරගෙන තියෙනවා. subsidiary ලැබිලා නැහැ. ඉතින් ඒගොල්ලන්ගේ payable වලට දාලා නැහැ, purchase වලට දාලා. That means group perspective there is goods in transit. So if the difference is goods in transit, you add that difference into the inventory. inventory. එතන එකතු කරන දෙන්න. Alright. Sometimes difference may be cash in transit. Fund transfer එකක් වෙයි කරලා තිනවා. යවන කට්ටියක බෑන්ක් එකෙන් අඩු වෙලා තියෙනවා. අනිත් කෙනා තාම එකතු වෙලා. ඒතර අපි cash balance එක එකතු කරා. Cash. Right. ඊළඟ වැදගත් දේ තමයි fair value adjustment. Now so far in the goodwill calculation we got this fair value of net asset of subsidiary which is equal to book value. We got the share capital and reserve retainer. That is the book value. But practically the fair value of the asset liability of subsidiary at the date of acquisition may vary from the book value. So you have to bring the subsidiary net asset to the fair value. අපි හිතමු අපිට කියනවා මෙතන PPE වල fair value එක 10000ක් වැඩි කියලා. right book value එකට 10000ක් වැඩි කියලා. එහෙනම් මේකට තව 10000ක් එකතු කරලා net asset ගන්න ඕනේ 160000. දැන් 10000ක් එකතු වෙනවා කියනවා 10000ක් PPE වලට එකතු කරනවා. මොකද අපිට දෙනවා මේ fair value එක net asset වල වැඩි property plant and equipment. ඒක නම් කිව්වොත් unrecorded revaluation reserve එකක් තියෙනවා. අපි ගත්තේ share capital and retained earning fair value එක measure කරන revaluation reserve එකක්. Consolidation purpose we revalue the PPE. Increase PPE and take that reserve in. Right. That is the fair value method. ඊළඟට දැන් මේ fair value adjustment එකක් මේ වගේ කරාම සමහර වෙලාවට දැන් මේ PPE එක depreciable එකක්. That will affect the subsequent depreciation. ඉතින් 10000 වැඩි කරා. මේ වැඩි කරපු asset එකේ remaining useful life එක අවුරුදු 5යි නම් මේක අවුරුදු 5ට depreciate වෙනවා. එතකොට මොකද වෙන්නේ? මේක 10000ක් එකතු වෙලා 2000ක් අඩු කරා. Depreciate වෙනවා. Depreciate වෙනකොට retain earning and NCA වලට ඒක බලපානවා. Because we are adjusting the profit of subsidiary. So that in this example 80% to the group, 20% to NCA. Right? So likewise we find some adjustments related to intercompany transactions. Right? We'll move to this one after short break. Then short break can start with the exercise 3. You are there. Now we have 1005, 1005, double 393, This will be a request, I don't say. If I am not answering, I just put the message. WhatsApp, you can have other than video, and then of course, double two. It's okay. So if I don't take a call, you can take a normal number, but you can take a message. It's indeed 17. LKS 21 non-monetary assets අදාළ LKS 21 වල non-monetary asset අදාළ වෙන්නේ foreign subsidy වලට. එතකොට කියන්නේ LKS 21 වල කැලුමක් තියෙනවා. එකක් තමයි foreign currency transaction. Foreign currency transaction වලදී නම් අපිට monetary item closing rate එක විශ්ල කරනවා. ඊට පස්සේ එතනදී non-monetary item අදාළ නැහැ. ඒ කියන්නේ අපිට රටකින් මොනවා හරි motor vehicle එකක් ගෙනාවා. ඒ motor vehicle එක ලංකාවේ වැලියුවට කරලා පස්සේ ආයෙ එච්චරයි. ඒ වැලියු කරන වෙලාව ගන්න rate. වැලියු කරන වෙලාව spot rate. එදා current rate. ඒක නම් practical issues තමයි average කරන්නේ. නෑ ඒ practically average ගන්නවා. ඒ කියන්නේ monthly average එක වගේ ගන්න පුළුවන්. සාමාන්‍ය monthly average ගන්න පුළුවන්. spot rate කියන්නේ ඔය කියන අපි සාමාන්‍ය monthly average එකක් ගන්න පුළුවන්. system එක දාගන්න තියාගන්න පුළුවන් monthly rate. සමහර වෙලාවට practically ඔබ standard rate එකකුත් දාගන්න. අපිට monthly average එකෙන් මාසේ අන්තිමට එනවා. ඒතර කලින් predetermined system එකකට දානවා නම් ගිය මාසේ average එක අරගෙන දාගන්න පුළුවන්. ඒක ප්‍රශ්නයක් නෑ. මේ වගේ වාහන practical නම් ඒ වගේ approximation වලට යන්න පුළුවන්. ඒක deviate වෙන්න පුළුවන් ඒක එහෙමද? ඒක තමයි දැන් ඔබ ප්‍රශ්නයක් කියනකොට ලොකුට කම්පියුටර් සාමාන්‍ය තත්ත්වයට මේක ලොකුට කම්පියුටර් වෙන්නේ නැහැ. ඔබ ජනවරි වල ඇවරේජ් රේට් එකකින් මාසෙක සිස්ටම් එකට දාලා තිබ්බම අපි පූර්ව වල ට්‍රාන්සැක්ෂන් වලට යනවා. ගැටලුවක් නැතර පෙබ්‍රුවරි ඇවරේජ් රේට් එක දානවා මාර්ච් වල. ඒක ඇඩ්ජස්ට් වෙලා එනවා. ඒක වාහන ඉම්පෝට් එක්ස්පෝට් වලට ඒක ගන්න බයි එක ස්පොට් එකක් නෙමෙයි. ස්පොට් එක ළඟ බයි රේට් එක ළඟ තමයි තියෙන්නේ. ඒ කියන්නේ දැන් යාලා මොනවද ඉම්පෝට් එක්ස්පෝට් ඉම්පෝට් නම් එහෙමනේ ඉම්පෝට් ඉන්වෙන්ටරි වලට දෙන්නේ දැන් අපි පර්චේස් කරන වෙලාවට ඩාටා රේට් එක ගන්න. ඒකට approximate average rate. එතකොට අපිට හම්බෙන්නේ ඩොලර්ස්. ඩොලර් අපිනේ දෙන්නේ. නෑ ඒගොල්ලෝ හැම එකටම දාන එකම රේට් එකක්. ඒ වෙනියු එකක් ගෑස් කරලා ඒ රේට් එක දෙනවා. සිස්ටම් එකට එක රේට් එකක්. හරි සිස්ටම් එකේ රේට් එකයි තමයි දාන්නේ. ඒ කියන්නේ ස්පොට් රේට් එක නැත්නම් දාන්නේ. එයාලා ඉම්පෝට් කරලා එක්ස්පෝට් කරන්නේ නැහැ. සේව් කරනවා. ඒක ඉම්පෝට් කරලා ගාමක එක්ස්පෝට් කරනවා. එක්ස්පෝට් කරනකොට හැබැයි එක්ස්පෝට් කරනකොට ඒ දාට තියෙන ස්පොට් රේට් එක. හරි. දැන් සිස්ටම් එකට ඇවරේජ් රේට් එකක් දානවා. ඒතර ඔයාලට ඔඩිට් එකේ අන්තිමට බලන්න එන ඩිෆරන්ස් එක. අර ඩිෆරන්ස් එක මැටීරියල් ද කියන එක අනුව ඔයාලට ක්වොලිෆිකේෂන් එක කරනවා. නැත්නම් ඒ ජනරල් එන්ට්‍රි එක පාස් කරනකොට ඔයාලට ඇඩ්ජස්ට්මන්ට් එක පාස් කරනවා. හරිද? ඒ ට්‍රාන්සැක්ෂන් එකකින් කරනවා. ඒ කියන්නේ ට්‍රාන්සැක්ෂන් ගොඩක් වෙනවා ස්පොට් රේට් එකම නේද ඔයාලා ඇවරේජ් එක. ඔයාලා මන්ත්ලි ඇවරේජ් එක ගන්නවා. ඔයාලා ඇක්චුවල් මන්ත්ලි ඇවරේජ් එක තියෙනවා. ඔව්. දැන් අපි ඊයර් එකට ගියාම ජනවරි වල මන්ත්ලි ඇවරේජ් එක ගන්නවා. පෙබ්‍රුවරි මන්ත්ලි වයිස් ඇවරේජ් එක කරන් බලලා. ඒකත් එක කම්පෙයාර් කරලා බලන්න පුළුවන් ඩිෆරන්ස්. right? So you can attempt this activity. ABC acquires 70% holding the share capital of XYZ. When the retained earning of XYZ 25 million. Retained earning of ABC and XYZ 31st March 23, 80 and 35. Then during the year ending 31st March 23, ABC sold goods to XYZ at a price of 5 million with a profit margin of 20% on selling price. Half of the goods were remain unsold. Then XYZ sold to ABC 4 million, 25% profit margin on selling price. 3 out of 4 remain unsold. Inventories of two companies 10.5 million, 6 million. Fair value of NCI 30 million. Consolidated retained earning, consolidated inventory NCI. But you have to අහන්නේ මේ වගේ activity එකක් consolidated retained earning. The consolidated retained earning, we have ABC and XYZ, right? We need ABC, XYZ post acquisition, which is 70% owned subsidiary. Then consolidated inventory and NCI. The consolidated inventory අපි සාමාන්‍යයෙන් columns වල දාලා parent subtract කරලා adjustment වලින් පෙන්නන්නේ. Here we are having the working only, not the full statement. So I am showing consolidated inventory. So we need to take a inventory of ABC and XYZ. මේක අපිට එනවා unrealized profit of ABC unrealized profit of XYZ. ඒකම එනවා inventory වල. Then the non-controlling interest. Fair value of NCI acquisition date. Then subsidiary XYZ. Post acquisition 30% belongs to NCI. %70 to group, 30% to NCI. Then unrealized profit of subsidiary, there will be an impact to NCI. Unrealized profit of the parent, full unrealized profit you can deduct from group retained earnings. But unrealized profit of subsidiary, there will be an impact to NCI. Right. First, consolidated retained earning වලට අපිට ගන්න පුළුවන්. The retained earning of ABC and XYZ by 31st March 2023, 80 million and 35 million. The parent ke 80 million තියෙනවා retained earning. Subsidiary ABC acquires 70% of ordinary shares of XYZ when the retained earning was 25 million. Then the retained earning of ABC and XYZ 80 and 35. So what that means? Subsidiary value increased from 25 million to 35 million. So post acquisition retained earning you can have 35,000 now. At the date of acquisition 25. From that 70%. 7,000. So NCI we need to take 30%. 3,000. And you are given fair value of NCI at the date of acquisition. Fair value of NCI 30 million. There is 30 million here. That you can take for the NCI calculation. Then the inventory, two companies of inventory 10.5 million and 6 million. 10.5 million means 10,500 ABC, 6 million means 6,000. Then unrealized profit එක හොයන්න පුළුවන් two intercompany sales transaction. During the year ending 31st March 2023, ABC sold goods to XYZ at a price of 5 million with the profit margin 20%. Half of the goods were remain unsold at XYZ. 5 million into 20% into half. එහෙනම් ABC ගේ unrealized profit එක sales value 5,000. 20% profit margin. From that half remain unsold. 5,000 into 20% into half. Unrealized profit we can deduct from inventory 500. $5,000 into 20% half. XYZ sold goods 4 million, 25% profit margin on selling price, 3 out of 4. XYZ වල 4 million into 25% into 3 out of 4. Profit margin එක 125යි selling price එකෙන්. Selling price එක 4000යි, 125යි 1000යි. අතරින් තුනක් කියන 700. Now this entire unrealized profit of parent we can deduct from consolidated retained. The parent के unrealized profit එක සම්පූර්ණයෙන්ම group එකේ retained earning එක අයින් කරන්න. Subsidiary unrealized profit 750. From that 70% we can deduct from consolidated retained. මේකෙන් 70යි. group එකෙන් අයින් කරන්න. Balance 30%. We can deduct from non-controlling. Right? So the unrealized profit, first thing you should be able to calculate the unrealized profit. When the sales value is given, profit margin given, sales multiplied by the profit margin multiplied by the proportionate remain unsold. Right? Ikiri pramana adathama unrealized profit. The entire unrealized profit we deduct from the group inventories. If unrealized profit recorded by the parent, you can deduct the entire unrealized profit from the consolidated retained earnings. If unrealized profit recorded by subsidiary, the group share you can deduct from the consolidated retained earnings. Unrealized profit applicable to non-controlling interest, you can deduct from the non-controlling interest. As subsidiary එකේ මේ post acquisition profit එක 10000 ඇතුලේ තමයි දැන් unrealized profit එක තියෙන්නේ. ඔය right? So මේ 10000 170යි group එකට ඇවිල්ලා තියෙන්නේ 130ක් NCI තියෙන්නේ. So when you are removing the subsidiary profit, reducing subsidiary profit, You have to proportionately adjust it into the group retained earning and non-controlling. Okay. Now we are moving to the main activity, third activity. Activity 3, you are given XYZ acquire 70% of PQR for 150 million. When the retained earning of PQR was 40 million. Statement of financial position 31st March 2023. Acquire karala tiyenne 1st April 2022. You are given the statement of financial position after 1 year. Right? So when the goodwill එක හොයන්න ඕන investment එක 150 million. Share capital එක 130. Retained earning at the rate of acquisition 40. Market price of a share 16. Measure the non-controlling interest using fair value method. Right. එතකොට අපිට NCI හොයාගන්න පොඩි calculation එකක් කරන්න වෙනවා මෙතනදී. Number of ordinary shares into 16 into 30% අරගෙන fair value of NCI හොයන්න පුළුවන්. All the activities what we discuss up to this point, fair value of NCI was given. Right? Now to make it fair value of NCI දෙන්න පුළුවන්. මේකේ ගත්තොත් make up add කරගමු ගානට rather than just එතකොට replace කරනවා fair value of NCI. Fair value of NCI as at 1st April 2022 was අපි 70ට 70ක් අරන් තියෙනවා 150 million වලට 60 million. Right. Calculate කරලා ගන්නවා වෙනකොට අපිට සාමාන්‍යයෙන් එලිම ගාන දීලා දෙනවා කියලා ගමු. මේක වෙනසක් වෙනවනේ. Right. This is what we were used. Then there is the intercompany sales. XYZ sold goods for PQR. PQR sold goods for XYZ. Then we have intercompany receivable, payable. And finally, we have fair value of net asset at the rate of acquisition equal to book value except PPE, which exceeds book value by 20 million. Right. Now, අපිට මුලින්ම කරන්න වෙන්නේ මේ parent subsidiary line by line එකතු කරන්න වෙනවා. goodwill එකක් එන්න පුළුවන්, non controlling interest එන්න පුළුවන්. Right. අපිට පුළුවන් මුලින්ම මේ මේක හදාගන්න. Consolidated statement of financial position format. Then you can have this format. May figures ටික දාගන්න පුළුවන්. දැන් මේකේ cash and bank එකක් තියෙනවා. Parent subsidiary adjustment and group column. Right. So we have X, Y, Z and PQR. X, Y, Z and PQR. 180, 130. $165. 70-55 inventory. Trade debtors 35 and 15. Then we have cash and bank. $15 and $20. Then the stated capital parent took 20,000. Retained earning and HCI, we can have the working. Trade payable 60 and 35. Right? These are the given balances. So we take asset liability of parent subsidiary line by line. Equity විතරක් අපි add කරන්නේ නැහැ line by line. Parent के share capital එක group එකේ share capital එක වෙනවා retained earning HCI we are taking from working. Right. Then we need working for goodwill, NCI and consolidated retained earning. It's a 70% on subsidiary. Goodwill calculation, you can take investment 150,000. Make actually 150,000 අයින් කරන්න ඕනේ. The fair value of NCI the 30%. Got it 60,000. 60,000. Right. The non-controlling interest fair value of NCI at acquisition date 60. Post acquisition PQR. We need to take 30%. And we need some adjustment for unrealized profit and all. Right. Can have this place. Then consolidated retained earning XYZ PQR post acquisition from that 70%. So XYZ retained earning, parent company retained earning 180. Subsidiary post acquisition we need to take 70,000, 70%. Right. අපි එහෙනම් පුළුවන් මුලින්ම subsidiary post acquisition retained earning හොයන්න. Now it is 60,000. 60. At the rate of acquisition 40. Forty තිබිලා 60 වලට වැඩි වෙලා. 40 වල ඉඳලා 60 වලට ආවා කියන්නේ 20,000 post acquisition. 60,000 minus 40,000. From the 70% to the consolidated retained. 20,000 into 7. 30% to the non-controlling. The basic working, right? Right, this is the basic given balances. Now we have taken to the our workings appropriate places. Okay. Right. Now we have additional information here. Right. So you can go through the additional information. So we have unrealized profit, intercompany receivable, payable, and fair valuation. Can you adjust first unrealized profit part based on information number 2 and 3? Right now here, XYZ sold goods for 6 million during the year by keeping 25% profit margin on selling price. 80% of the goods were remain unsold. අපිට unrealized profit එක බැලුවොත් මෙතන 6 million into 25%. Right? අපි unrealized profit XYZ බැලුවොත් 6 million 25% ඒකේ 80ක් හතරෙන් පහෙන් හතරක් දැක්කා 80ක් වෙන්නේ. right තමයි realize කරන්නේ. So 6,000 minus 6,000 into 25% into 8. 1,200 is the unrealized profit. That unrealized profit you can deduct from inventory. Inventory වලින් අඩු වෙන්න ඕනේ, consolidated retained earning වලින් අඩු වෙන්න. Then PQR के unrealized profit එක 5 million sold, 20% profit margin, 60% remain unsold. 5 million 20%. 1 million එනවා 60% 600. එතන unrealized profit එක එන්නේ 600. But we are not deducting entire 600 from the group because From this 600 PQR, this is subsidiary, we have to take only 70% of the group. This is unrealized profit against it has to by group figure. Which is 600 into 70%, 420. The balance 30%, you can deduct again, not controlling. Okay. So you calculate the unrealized profit, entire unrealized profit deduct from the group inventory, but subsidiary unrealized profit, the group holding percentage 70% deduct from the consolidated retained earning, 30% deduct from the NCI. Then the fourth one, receivable of A include 10, XYZ include 10 million receivable from PQR, but payable of PQR include only 7 million. There's a 3 million difference due to cash in transit. So what we can do, we can remove 10,000 from receivable and 7,000 from payable, and the difference 3,000 can add back to the cash. To the cash. 10,000 removed from the trade debtors receivable, 7,000 from creditors, 3,000 cash in transit, you can add to the cash. So the last one, fair value of net asset of PQR at the date of acquisition equal to book value except for PP item, which had a fair value exceed by book value 20 million. This is important for the goodwill calculation. At the date of acquisition, retained earning, we acquired when the retained earning was 40. Share capital no change, 130,000. So අපි බැලුවොත් goodwill calculation එකට ගිහිල්ලා මෙතන fair value of net asset of subsidiary 130,000 share capital plus 40,000 retained. සාමාන්‍ය ගන්න වෙ දෙකනේ. ඉදාට දිනන වෙද්ද. හැබැයි ඊට වඩා අපිට අලුතෙන් adjustment එකක් කරනවා 20,000 PPE fair value exceed. ඒක අපි අලුත් adjustment එකක් විදිහට ගේන්න ඕනේ මෙතනට. 20,000. You can add that 20,000 to PP as well. PP වලට 20000ක් debit වෙලා reserve එකට credit වෙනවා. Consolidation purpose we increase the PPE at the reserve. So altogether it is 190,000. So we have a goodwill of 20,000. We revalue the PP for the purpose of consolidation. Right? At the rate of acquisition, asset liability of subsidiary should be measured at the fair value. So up to now, all the activities you are not given any fair value difference, so we assume the fair value equal to the book value at the rate of acquisition. Right. Then you are given remaining useful life of this item 5 years. Now, consolidation purpose, we increase the value by 20 million. That is at the date of acquisition, 1st April 2022. Now we are at 31st March 2023 after 1 year. So you have to depreciate this. So when you increase it by 20,000, you have to depreciate it over 5 years, means annual depreciation increase by 4,000. So we increase the PP by 20,000 and we have to decrease the PP by 4,000 depreciation. ඉතිදාහකින් වැඩි කරලා අනිත් පැත්තෙන් 4,000න් අඩු කරන්න. Now we are increasing the depreciation of subsidiary. When you increase the depreciation of subsidiary, this is the depreciation adjustment. Depreciation on fair value adjustment. Fair value adjustment එක ආපු depreciation කාගේද subsidiary PQR. So only 70% impact should go to the consolidated retail. Again, 20000යි. Depreciation out to 5කට 1 out of 5. From that 70%. 20,000 into 1 out of 5. From that 70%. Now, whatever depreciate වෙනවා කියන්නේ 4,000 වලින් profit එක අඩු වෙනවා subsidiary එකේ. So the retained earning reduced by 2,800. %30 of this should have adjusted to NCI. Thousand to one. So the non-controlling interest 64,620 and consolidated retained earnings 189,580. Goodwill 20,000. Consolidated retained earning 189. NCI 64. Now rest you can total. So you take a total correct. PBE, investment, inventory cash, trade debtors cash, stated capital, parent ke stated capital එක හැම වෙලේම group stated capital බවට පත් වෙනවා ඒක වෙනස් වෙන්නේ. So now we can have the total 180 plus 130 plus 20,000 minus 4,000. Here 160 plus 5 minus 150. 70 plus 55 minus 1,800. 35 plus 15 minus 10. Right. මේක වෙනසක් නැහැ. එහෙනම් මෙතන අපි ගත්ත ෆිගර්ස් වල මොනවා හරි වෙනසක් තියෙනවද බලන්න. මෙතන 560 to 200. Steady. Right. So this level of adjustment you are expected to know about consolidated financial statement, right? Basically, goodwill, FCI, and consolidated reserves with intergroup transaction resulting unrealized profit, intergroup receivable payable, and that result goods in transit or cash in transit, and the fair value adjustment which is subsequent decision. Any question? The consolidation account is basically make subject to consolidation right? Consolidation is a very broad topic. They call a finally account, advanced financial report, consolidation right? State taxation, disposal, consolidation of the Excel sheet retail animal adjustment file and that follow the family level practical consolidation but this is basic, right? Four part. So if you have any doubt, you have to get it clear before we move. That means you incorporate means that you are incorporating and issuing shares to the parent. Right? So whether you are issuing shares to parent invest. So that becomes their cash. There's no goodwill. Goodwill. Then the share capital and investment will be the same. You can just offset in the goodwill calculation, the investment 100 million. Equity later is acquired also, that is equal to share. No retainer. Retail earning is a strategic business. So then the total will become 5 million plus 3 million. So always in the goodwill we are comparing The net asset means equity. It means share capital plus reserve. Right? Total. Yeah. So in any situation you can apply this. Right? Only some value may be zero. Yes. Which one? Either is the profit margin 25%. And that is 1,500. Yeah, 1,500. From that, 6,000 sales value. Profit margin 25% on selling price. Selling price 6,000. 25% is 1,500. 80%. I'm sorry. No. Now here you are given. Read the question. This is profit is given as a profit margin on selling price. What you are referring to, if it is given as profit markup to cost. Right? Cost 100 plus 25, then selling price 100. Right? There is costing and profit. So here you are given normal case, selling price is given, and profit margin on selling price is clearly given. Right? Here is profit margin, right? Not the markup. That is way that will cost a product. 25% profit margin on selling price. Selling price against CPC. Sold for 6 million. 6 million is the selling price. From that, 25%. Right? That 25 out of 125 comes if you are given company keep 25% profit markup to the cost. It's a different story. There is nothing to do with consolidation. There is way that you mentioned the price. So in this level, we are taking everything profit margin, right? Profit margin markup take finally right? But secondly, again, that's okay, right? Just to calculate the unrealized profit, you are given the profit as a percentage of selling price always. So just multiply it by the given percentage and take what is unsold. There is nothing else. Okay, anything else? Right, so far we discussed the balance sheet consolidation, right? Statement of financial position, where we have assets, liability, equity. Then, because when we discuss balance sheet consolidation, the income statement, statement of profit and loss relatively easy. There we have income and expenses. We have had line by line, right? So here you see consolidated statement of profit and loss and other comprehensive income. And line by line income and expenses of parent and subsidiary. Income and expenses. So we are not adding the subtotal, right? Now for an example, you look at this one. Now if you are consolidating Venus and Mars, statement of profit or loss, revenue of Venus add with revenue of Mars. Cost of sales of Venus add with cost of sales of Mars. We are not adding the gross profit of Venus with gross profits of Mars. Because that is the subtotal that you have taken from the group column calculated figure. Right? Group revenue minus group cost of sales. So other income and expenses here we have given this admin distribution, all expenses as one item. So those are you can add, not profit before tax, which is a subtotal. We are not adding this subtotal. Profit for the year we are not adding. And total comprehensive income we are not adding. So in consolidation of statement of profit or loss and OCI, we are adding sales of parent with sales of subsidiary, cost of sales of parent with cost of sales of subsidiary, other income of parent with other income of subsidiary, then admin, distribution, finance, other expense of parent with those expenses of subsidiary. Practically, you have these subheadings. Just to understand this concept, we no need to have these separate headings of different type of expenses. So we take all the expenses as one heading, these operating and finance expenses, right? Then from before tax we are not adding. That is taken from the group column calculated figure. Income tax expense we have to add. Then we can have profit for the year. Then other comprehensive income like revenue and surplus we have to add. Right? Then remove all intercompany income and expenses. Now, statement of financial position, we remove only the unrealized profit. But statement of profit or loss, we have income and expenses. So here it says that Venus sold goods 3 million to Mars. Now this 3 million included in this 25,000 sales revenue. The sales value. That become purchases of subsidiary. So this 10,000 include 3,000 purchase from parent. The group perspective, you have to remove this intercompany sales from both sales and cost of sales. Otherwise, you can have very high sales and cost of sales. You can just sell goods parent to subsidiary, subsidiary to parent. You can have very high sales and cost of sales values. Right? So, in order to avoid that, now sales are overstated because parent sold goods to subsidiary, no outside sale. So, irrespective of whether goods remain unsold or not, this 25,000 revenue includes 3,000 sales made to subsidiary. Group perspective, no such sale. So you have to remove it. And this 10,000 include that 3,000 purchase from parent that you have to do. Similarly, when the subsidiary sold goods to parent 2 million, this is included in the sales 15,000 and cost of sales of 15,000 of sub parent. So this intercompany sales you have to remove from both sales and cost of sales. Then we have to adjust unrealized profit. Now the previous activity we calculate unrealized profit. So when the goods remain unsold by the purchasing company, it is an unrealized profit. So unrealized profit, because of the unrealized profit, closing inventory of the purchasing company now overvalued. So they are going to include that profit. So when you remove the unrealized profit, cost of sales of the group will increase. Because cost of sales calculation, we have deducted the closing inventory at cost, but that includes unrealized profit. So we have to add back unrealized profit to cost of sales. Right? Unrealized profit take a stock and the cost of sales value. The unrealized profit take cost of sales to the balance sheet එක පැත්තෙන් කෙලිම retainer earning වල ගැලපුවා මේකේ net effect එක. Now here you have to show it to the appropriate place. Unrealized profit is affected to cost of sales. You have to add back to cost of sales. Then dividend income received from subsidiary. Normally parent own 60%, 70%, 80%. When the subsidiary pay dividend, right? Here subsidiary pay 1 million dividend. And it's 80% on subsidiary. So when subsidiary pay dividend 1,800,000 received by the parent, that should be included in this other income. The other income we can do, but that is not an income received outside the group. So you have to remove it. Dividend income received from subsidiary. ඊට අමතරව all income and expenses that might include some other income. Parent company can rent out part of its building to subsidiary and earn rent income. That becomes rent income of parent, rent expense of subsidiary. We have to offset. group perspective, no income, no expense. Parent might grant loan to subsidiary and earn some interest income. Group perspective, you have removed the interest income and you have removed the interest expense, right? Offset. Likewise, when you make these adjustments, adjust the O under depreciation, article depreciation adjustment that you can adjust. Then can calculate the group profit. Finally, take the other comprehensive income of the group, total comprehensive income. Then we are showing this profit, how much attributable to non-controlling interest, how much shareholders of the parent. It's an additional disclosure. Samani consolidated financial statement samani statement of profit dollars, profit for the year, other comprehensive income, total comprehensive income. It's consolidation වලදී ඊට යටින් එනවා profit attributable to shareholders of the parent and NCI. Total comprehensive income attributable to shareholders of the parent and NCI කියලා statement of profit or loss එකේම පහළට තව disclosure එකක් එනවා. Right? Okay, so we have this statement of profit or loss, consolidated statement of profit or loss, so we'll take it on next Sunday morning, and your group report is due on next Sunday, right? Same topic, you can come up with the report, but you went to presentation, right? Okay, with that we can take lunch.